Hello, Mavericks. This is Rob Reinhold. It is nice to be back after a month away. It is February 23rd. Let's check and see what the market did today. All right, so when we take a look at these markets, and we'll get into the charts here in just a second, you can see that the markets had an up day at the end of the day. We're going to take a look at the intraday action. You can see the Dow up 1/3%, S&P up 0.5%, NASDAQ up 0.75%, oil up, gold down a little bit. So when you take a look at just the end of the day, you can say, okay, well, this was a slightly positive day. We started the day off very strongly. The NASDAQ was actually gapping up more than 1% off of NVIDIA's earnings. The earnings came out, they beat guidance, and they said that the AI craze is likely to continue over and really help their business. So technology started off on a very strong footing. And then we also got fourth quarter GDP that was revised downward a bit. Again, that's looking in the rearview mirror towards the fourth quarter. No one really cares about that. But you can see here, we actually had an update at the end of the day. But when you take a look at these charts, I really want to focus in on today's candle, because today's candle at one point looked really ugly. Now, we had pulled back all the way from 415 here, all the way down to the 50 period moving average. And we got a little bit of a bounce there yesterday. And at some point today, it looked like this was going to be a big, fat, ugly red candle, which would have meant that this support is not likely to hold. If we take a look at the intraday action, you can see that we fell hard and we fell quite a bit. And then we started to work our way back. And then finally, by the end of the day, when people said, okay, we're not going to close on our lows, we got some buying and rescued the day. Now, that's all I can really say is we rescued the day. This is not a great candle. So here we have the Qs. It was a little bit stronger today, but you can see here that's not the kind of confirmation candle we like. We like it to be a green candle, and we like it to be a big fat green candle that tells us, okay, this is good confirmation. Here was good confirmation. That's a good confirmation candle on a pullback. Here's a good confirmation candle on a pullback. Here's a good confirmation candle. This isn't the exact candle you want, but sometimes you don't get the candle you want or you think it should be. You cannot look at this candle and say anything other than by the end of the day, the buyers came back into the market and they bought it up. Now, that doesn't mean that we're guaranteed to get an update tomorrow. But when you take a look at what we expected to happen, we expected there to be a pullback. At some point, if we expect it to only be a pullback, at some point you will start to get some bullish price action. And we got the doji, and we got this hammer-like pattern right here. If you say to yourself, hey, I think these candles are garbage and I think the market's going lower, my guess is you're probably more short than long, and you're hoping the market goes lower. This is more bullish than bearish. I hate to break it to you if you're short, but this is more bullish than bearish. Now, let me take the other side of if you are super bullish, this isn't the kind of bounce you wanted. This isn't a, oh my gosh, what a great bounce off the bottom. It was a rescue. It was a rescue off the bottom. So tomorrow's candle, if I'm bullish, I want to see a green candle that opens at the low, closes at the high. That will be more confirmation that yes, this was a swing low and we are likely to trade back up to the 305, 310 area where we have resistance, somewhere up in here. So yes, this is a bull pullback. This is a bounce. Those are confirmation candles. They're not great, but they are more bullish than bearish. Green candle tomorrow will tell me, okay, that is a little bit better confirmation on the price action. If we take a look at the sectors, the best sectors today were energy and tech. Everything else was pretty much flat or down. Energy and tech did really well today. And other than that, everything was pretty mixed with winners and losers. So let's take a look at what our outlook was. Our outlook, we had downgraded from a +2 to a +1. Once we broke this 20-period moving average, we downgraded. Say, okay, you can no longer be as bullish. We came down here and we bounced at the 50-period moving average. As I said, this candle isn't the greatest candle I've ever seen, but it is more bullish than bearish. We had a -1 on the week. So we definitely got that pullback we were expecting. Friday's candle is going to be pretty important to what our outlook is next week. A green candle, and I think we can go back to being a little bit more positive than we were at the start of this week because the pullback looks like it is finished. A red candle tomorrow, and it's going to be basically, hey, we need to wait and see. We're not seeing a good bounce off this, but we're still in more positive than negative territory since we are above the 50-period moving average. Let's take a look at a few potential trades here. First one on the long side is going to be DHT. Now, DHT is in the energy sector, and if you take a look at the energy sector, holy cow, some of the stocks look fantastic, look very bullish. And then some of the stocks look dreadful and look really bearish. The sector as a whole is neutral, is going sideways. But there are some decent trades inside of the group. This is DHT, exactly what we like. Saw a big run here off of some news. It peaked out, had an orderly pullback. We got our hammer candle here, and we got confirmation. Again, this is the confirmation candle we like. This is what we like to see. At this point, it is triggered, and I think you can take a look up to 1250 for a target on this one for DHT. And the sideways, we're going to stick with this energy here. This is the XLE. This is the energy ETF, and you can see we are range bound here. Now, we are trading near the bottom of the range. And if you take a look at the price action over the last month, it's been more weak than strong. So if you're looking to play this one sideways, I think you want to play it below 90. I think 90 is pretty much the top. You could even come down to like an 88, I think. Say, hey, I think that's the highest it's likely to go. I think you want to be a little bit bearish on this. So maybe a midpoint of 84 or 83, somewhere around here where you basically say, hey, I think it's going to stay in this area. We are unlikely to see it come all the way back up to 93 here. But the energy sector doesn't look like it's breaking down all that much either. So I think you want to be slightly bearish on your sideways plays. So like a 80, 83, 86 butterfly, a 79, 84, 89 butterfly, something around in there where you want to be just a little bit below the current price. Moving on to some shorts. This is JD, and this is just a nightmare of a chart. Gap down, bad news. Look at this. First day, selling. Next day, gap up, selling. Next day, gap up, selling. This is telling you the sellers are there. This thing has had a big drop, and every day it gaps up, it sells off, it sells off. It means the sellers are still there. I think a break below 45 is highly likely here over the next little bit. I would want to be short, and I think a very easy trade here would be like a 46-48 bear call spread, or like a 45-48 bear call spread. Something in here to where you are bearish, but not asking for this to really crash. We are not in a market that is tanking. We're in a market that is trying to find some support, so any bearish trades need to be mildly bearish at best. Moving on here to Intel. Here's another stock. If you take a look at this one, it is at some major support here. We've just had a big couple down days. I don't think this thing is going to fall more until it has a little bit of a pause. Either a little bear rally or a low base. These are the kind of stocks I love to do diagonals on. Diagonal put spread here. I think it's going to hang out in this area down here somewhere between 25.50 to 26.50. Maybe even all the way up to 27. I can easily come in and play this with like a diagonal put spread, or I can use some other sort of spreads to where basically the call is it stays below 27. And if it breaks down, maybe I won't make a ton of money, but I'm just going to play this neutral to bearish here. So possible trades here, maybe like a 27 put out to March and a short-term 25.50 put that you sell. So again, a diagonal put spread to where your risk graph is going to look something like this. So tomorrow's outlook, the markets did bounce to support. It's not a perfect handle. Tomorrow is pretty key. We have a big inflation number, the core PCE price index. This is the Fed's preferred inflation index. If it comes out hot, the market is likely to sell off and likely to break that 50-period moving average. If this comes out okay, I think the market probably has an up day tomorrow. And if it comes out good, we could actually see a nice bounce back because we did hold that support level. The buyers are still there. We are not in a bearish market condition here at all. The buyers are still lurking. It's just they're a little bit tired. Only notable earnings for tomorrow is Berkshire Hathaway before the bell. That's going to influence the financial sector. That is a market roundup. Thanks for joining me. Goodbye, everyone.